So just talking a second ago about investing in money, and, if you got somebody managing your money, ask them a question. When did you start managing money? And the reason I say that is that when you have a call like with Ron, who clearly doesn't understand how markets actually work, this also applies to people who have never been or seen a bear market. Since 2009, 13 million people have joined the financial services industry. Now, that's great. What have these youngsters, and I get to call them youngsters now, right? Because I'm 52. So everybody that's under the age of 45 is a whippersnapper. So these kids, these 13 million kids that have joined the financial services industry have experienced what? They've known a market that only goes up, endless quantitative easing programs, uber low interest rates, economic expansion, FANG stocks, right? Facebook, Amazon, Netflix, Google, weed, weed stocks, marijuana stocks. It's been a bull market in everything. Everything's gone up. Doesn't matter what you buy, it's gone up. So when you ask them about how to invest money, they say, well, you just buy and hold, right? We just hold on, ride this thing out. There's a little bump in the road. The question you have to ask yourself is, will they identify when it's no longer time to be in the markets? Now, I can tell you these same individuals existed because, as I was saying a second ago, when I started doing radio back in the days where they had chipmunks that generated the radio signal by running on treadmills, Brent was my introducer. He was the operations manager at the station we were at, and was kind enough to give me a shot. I think it was more desperation at the moment.
You made a good pitch.
Made a good pitch. So the way he introduced me to radio, he goes, "There's your producer, there's your mic, good luck." And that's where it all started. But at the time, we were right in the middle, actually just getting ready to really head into the trough of the downturn in the financial markets and the dot-com crash. Well, coming out of the other side of that, we saw exactly the same thing. See, what happens is during the downturn, a lot of financial advisors get washed out of the system, right? They lose their clients, they get fed up, whatever. And so during these big major downturns, a lot of the financial services industry gets wiped out. People leave the industry to go do something else, right? Sell real estate, whatever it is. And so the new crop that comes in, they've never seen a bear market. And so this is exactly what happened in 2004, 5, 6, and 7 is that everybody was saying, hey, markets just go up. It's all great. Buy real estate, whatever. It's all great. And then 2008 came. And we washed out a big chunk of the financial services industry. And now we're back again. So ask the question, how long have you been around? Have you seen a bear market? Because if you've lived through a bear market, if you've actually lived, and I can tell you, I deal with a lot of financial advisors around this country. I have very close relationships with many very, very good financial advisory, registered investment advisors. We share commentary, we share research, we share ideas. And these guys that have lived through the 2008 crisis, you won't hear one of them talk about buy and hold. You won't hear one of them talk about not worrying about long-term investments. You don't hear any of them talk about be equity only. None of them. Because if they were that way going through the financial markets, they learned their lesson. If they weren't that way, they survived and prospered in the bear market of 2008. Same thing happened in 2000. The people that survived after 2001 and 2, you never hear them talk about just buy and hold. And there's a reason for that. Because it doesn't work. making up capital, making up lost capital. Sounds noble, right? Just buy and hold. If you just lose 50% of your money, it's no big deal. You'll get it back. Markets always come back. True. But if you spend 7 or 8 years of your time horizon getting back to even, and again, unless you've developed vampirism somewhere and have the ability to live forever, we all have a finite clock that we're working against. Mine's about 6 months from now, I think. But we all have a finite clock. We're not going to live forever. And we're also on a finite clock of where we're going to start needing that money. So if I spend 7 years of my 30-year horizon to save money, I now only have 23 years. If I lop off another 7 years along the way, well, I have that much time left to get to where I need to go. And simple mathematical calculations will tell you that buying and holding an investment portfolio over the long time won't get you your financial goal. Will you make money? Probably. If you have a long enough time window that you can just buy an index and stick money in it and hold it, if you've got 30 years, you will probably make some money. Odds are very high that you will have a positive net return. But you will be far short of what the money goal needs to be in order to fund your retirement successfully. Let me just ask you one more question. If saving and investing money was as easy as people tell you, just stick it in the market and hold on, then why is it that 80% of America has no money? Can't come up with a $500 fund to meet an emergency? If investing was so simple, why is it that the top 1% of the economy has 60% of the wealth? If investing was so easy, why isn't everybody rich? Why can't we just all fund our own retirements and, save Social Security? Because investing isn't easy. Investing isn't just sit on it, buy and hold, and it's all going to work out fine. Never has been. Never will be. There are periods in time where the markets seem to rise unabated. And it doesn't matter what seems to happen. It just goes up. It doesn't matter whether the news is good or bad or whatever it is. Markets just go up. And investing in those periods is extremely easy. I just throw money at anything. I can buy stocks that are trading at 15 or 16 times price to sales, and I don't get punished for it. I can buy stocks with no fundamental quality like Tesla and not get punished for it. The problem of rising bull markets is that they cover up all the investment mistakes that we make. I can make poor investments and I make money. I can overpay for things and still make money. I can take exorbitant risk and not be punished for it for a time. But the problem is ultimately is that there will be a point to where that cycle ends and the next cycle begins. And it is during bear market declines. And the reason they call them bear markets is because they're rapid, they're fast, they're mauling. No one escapes. And the reason that they're so bad is because what bear markets reveal is all of our investment mistakes. These strategies of, I just bought and hold, I'm just going to buy and hold it for the dividend, are quickly revealed as false. I just want the dividend. Don't care about the price of the stock. It's a false strategy. Because what's going to happen is during the bear market, not only are you going to lose 50% of your money, during the decline, the companies that are paying out the dividends will cut their dividends to protect their shareholders and their creditors. So now not only have you lost 50% of your money, you've also lost the dividend. If you don't believe me, go back and look at what happened in 2008. Did you happen to know that March had the biggest number of dividend cuts on record? Wait, if the economy's doing so great, why are companies cutting dividends at a record rate? If the economy's doing so great, why do we continue to need central bank intervention on a global scale? Managing risk is the most important thing you have to do with your money. You have one goal. It's that old joke. You have one job, and that's to save money. See, back during the post-World War II era, you could simply just save money in a money market account because you were making 5 and 6% interest. Rule of 72 says you're going to double your money every 12 years just in a money market account. So people could literally save for retirement by putting their money into an absolutely safe, highly liquid money market account. You can't do that anymore. So unfortunately, you're forced to do something. But you don't have to take unadulterated, unbridled risk in the financial markets where you potentially stand to lose half your money or more. And it will happen. I can't tell you when. I'm not promising you that it's going to happen tomorrow or next week or next month, but I can tell you with absolute certainty there will be another major market reversion at some point in the future. And if you are blindly following the mainstream media and have never worked through a process, you will be damaged. And it's something that you truly never recover from.